Your portfolio didn't imagine it. This week was a full market mood swing. Tech cooled, then roared back. Inflation eased. Earnings shook up big names. Here's the clean breakdown in under 4 minutes. Hi, I'm Sienna with Wealth with Attitude. We're covering the index scoreboard, what led, what lagged, the economic data that mattered, earnings reactions, global headlines, and what to watch next week. If you like fast, clear market recaps, hit like and subscribe and follow us for more. Scoreboard first, the Dow finished the week down about 0.7%. The S&P 500 was basically flat but slightly positive, and the Nasdaq led up about 0.5%, helped by a late-week rebound in AI and semiconductors. The big positive trend was a late-week rotation back into AI and large-cap tech. NVIDIA and Broadcom helped lead the push higher into Friday, one of the clearest signals that buyers still want exposure when the setup looks right. Micron was a headline mover this week, rallying on results and forward guidance that signaled strong AI-linked demand in memory. That helped reinforce the broader chip story. AI isn't just one company, it's a whole supply chain. Oracle jumped after announcing a joint venture structure tied to TikTok's U.S. operations. It's a reminder, in this market, policy and platform headlines can move individual names fast. On the downside, Nike was one of the week's most visible losers, dropping after earnings amid margin pressure, weak China performance, and tariff headwinds. That's the consumer story in one sentence. Spending is still there, but it's picky, and costs matter. Lamb Weston sank sharply, a reminder that even in a flat index week, the market can punish company-specific execution issues aggressively. Macro-wise, the delayed jobs report showed payrolls up about 64,000 for November, with unemployment at 4.6%. Traders read it as cooling labor conditions. Important because it feeds into the entire rate cut conversation. Inflation also cooled. CPI was reported at 2.7% year-over-year in November. But even the data providers flagged missing observations, so markets treated it as supportive, not a victory lap. Retail sales were flat for October. One more reason markets are hypersensitive to each new data point that hints at growth slowing or holding up. Earnings did real damage and delivered real upside this week. Micron rallied on strong guidance tied to AI demand. Nike sold off hard on margins and China weakness. FedEx posted stronger results but flagged up to $175 million in unexpected costs tied to MD-11 fleet grounding. And Carnival rose on an upbeat outlook and dividend news. Globally, the Bank of Japan raised rates to 0.75%, a 30-year high, keeping global rates and currency narratives in focus heading into year-end. Moves like this can ripple through risk appetite, even when U.S. stocks are the main event. Next week, expect thinner holiday liquidity, meaning moves can look bigger than usual. Investors will be watching anything that shifts rate expectations, whether AI and semis can follow through after the rebound, and how consumer names behave under cost and demand pressure. And keep an eye on headline risk. Policy, tariffs, and platform deals can move markets fast. If you want weekly market recaps that are clear, calm, and actually useful, subscribe and drop a comment. Are you watching the AI rebound, or do you think value takes the lead into year-end? This is Wealth with Attitude. Stay smart with your money.